show you what to do. Alright, we live. One moment. Make sure everything Gucci. Yeah, they say have class 9:30. Oh, okay. Yeah, I decided to have class late. Should respond back. Alright. I'm gonna make sure everything working right quick.
Oh my God.
SMS part done.
Oh my God.
SMS part. Okay, perfect. Alright, man, we lit it. I think it's good. Alright, damn. Alright. So I'm gonna go over on because I'm on Friday right now, so let's just go over Friday right quick. I'm gonna go over Friday price action right quick. If you have any questions, anything, just write it into the chat, and I will see it and respond and keep going as I see it. Alright. So we're gonna go over Friday's price action right quick. Okay. So this is Friday right here. This is a 5-minute chart. Right. Okay, so let's focus on pre-market. Okay, so this is Friday's chart all right here. The gray zone is from 9:30 to 12. So before you could get into here, you want to look left. You always want to look left first. So pre-market is all right here. So one thing I do see is that I see there's equal lows, right? That's just the first thing I see. There's equal lows right here. Midnight open is here. 8:30 open is up here. Okay, cool. What else I'm looking at? I'm looking at there's some liquidity up here. There's that liquidity that's right there. That was yesterday. That was like yesterday's high. So we got yesterday's high right here, and we have a low in the pre-market right here. So we have triple lows right here, and we have a high up here. So we see how this high right here got swept in the pre-market. Right, this high got swept in the pre-market. So I see that. Let me draw my arrows right there up here. So I see that this got swept right here in the pre-market. Okay. So now remember how we like to trade. You want to see a sweep of one end and basically target the other in the way. And yes, we do trade continuations, but remember, if you want to see it continue from this high that got swept out, which was here. See how the high got swept out here? So if you want to see a continuation from this high, you will want to see it leave and displace away after the sweep, right? So you would want to see it something like this. You want to see it actually sweep and leave it, right? Sweep it with speed and volume, right? Displacing away, creating some type of fair value gap up here. So remember, that's what you want to see if it continues. You want to see speed past highs or lows for continuation. But did we get speed past these highs right here? No, right? You see how it swept it here? It came back down. swept this higher here again, came back down. So you see how it's sweeping and it's showing a willingness to not go higher, right? So that's a sign, right? Basically a bearish order flow, right? So if you're bullish, that's not what you want to see, right? And because it's a Friday, usually on Fridays, we do, if it didn't reach the target, right? On Fridays, if it didn't reach the daily or weekly target, it would do a 20% reversal, right? Which is we've been trending up and up and up. You see, we've been super bullish. So it usually would do some type of retracement in the opposite direction, right? And then what else we see here? So we see that it's swept. We see that it swept out this high up here in the pre-market, and it's showing a lack of displacement of move higher. You see that it wants to lower, sweep, come back lower, right? Okay, cool. Now, and we see that where are we in price, right? If we're way up here in this blue, at this blue arrow, right? If I draw a fib from up here to down here, because this is the high, the low of where this is at right now, you see we're above equilibrium of this high to this low range, right? So that's a premium, right? So we know the best short plays happen when you're in a premium. Second confluence, which is the first confluence, is we actually want a 20% reversal because we already reached the daily weekly target. The second reason is, okay, we already swept this high and it's showing a lack of speed to go higher, right? It's sweeping and coming back lower, so it's kind of consolidating at a liquidity zone, right? That's not what you want to see for expansion or for continuation. Number two. Number three is that we got equal lows right here, which is Asia's low. So this low right here is at 910. This low right here is at 115. So we have equal lows right here at Asia. So we have equal lows down here, and we just swept out this, and this is up here is Asia's high. So we just swept out Asia's high and yesterday's high, which is up here, and it's showing a lack of move to go lower, and we have a reason to go, a lack of move to go higher, and we have a reason to go lower, which was these two lows right here, and we have yesterday's PM low, which was right here, right? So that's three lows. Remember, that's even, right? It's sweet. This is even. The market likes to come up and make it jagged. Like, you see how jagged this is? It up, it took the high, came back down, took this high, came back down. So it's jagged. It's not smooth and sweet up here no more, right? So now it's going to come down and hunt the opposite end. So that was the actual draw on liquidity. So now as we come up here, so I'm just giving you all the analysis. Like, remember, a lot of times you can know the concepts, right? Like, you can know the order blocks, you can know about the fair value gaps, like you can know about all these things, right? You know about a breaker block, you can know about all this thing. She said, I'm at a party. Do you Thug Dizzy? Yeah, so you can know about all these things, and sometimes the plays don't work, right? So sometimes it's about putting it into context. So it's like, why do it need to go down, or why do it need to go up? What's the reason that it really needs to go up here? What's the reason that it's, I'm saying, all those things. So it's like the best plays happen when everything aligns, right? The right timing, the right moves, the right liquidity, the right draws, and all of those things, right? So if you see, if you go on the 1, if you see, so if you go on the 1 minute, when the market open, so we're on the 1 minute right here. All right. So the market literally opens right here. You see how it sweeps out the internal high right here, and then moves lower, comes back up, sweeps this high again. So we have a lot of little back and forth. That's why you don't really want to, for some people in the beginning, you don't really want to trade, right, the first 30 minutes, because it's really volatile. And if you don't know what's going on, it can just, like, you can lose all of your money up here before the moves actually happen. That would happen to me a lot. Like, I get caught up into moves before and the move, and I get burnt out. I'm over 3 already, or over 2, and then now the move run, because it's designed to stop you out and do all those things. So you got to make sure you understand what's going on, right? So we see the market open up here, sweeps out this internal buy side and goes down, right? And I'm gonna show my trade because I took a loss right here, right? So it swept, came back down. Now we have this generated low because remember I'm bearish anyways, because of all of the other reasons why. So this is a generated low right here. For some reason I can't find it. But anyway, this is the low. So now it comes back up. So what we have this fair value gap. So we zooming in now. So now we have this low here. It pulls back. Remember, we like to catch the pullbacks. We have this fair value gap right here, coupled with a volume imbalance on both sides. So it's actually a suspension block. So then we pull right back up. You pull it back up to this fair value gap right here, coupled with this change in state of delivery. You see this bearish candle here. See how it closed below, coupled with the fair value gap. We drop right here. We do not take out none of these lows, right? We generate more lows. And then we pull back up to this fair value gap right here. And this is where I caught a play and I lost. So it comes back to the zone. I'm expecting it. You see how it respected equilibrium? It stopped right at equilibrium. Look at the wicks. Stopped, and then it was going lower. So, but you see, it did not create an order block outside that zone. Right? So you see with this bearish candle, it was trying to close below, but it never did. Now you see, we have a small little bullish fair value gap. So it's showing that it's still respecting bullish order flow. Wait, right here. Boom. So look how it hits here, comes back, respecting this bullish fair value gap, and goes up and stops me out. This short play. But this wasn't my play. This was my dog play. I kind of just copied his trade. But I thought it was a good play, so that's why I took it. So, and it stopped me out there. So you see how it's still respecting bullish order flow. Cool. Take a loss. Now you see how this zone is being used right now. So you see how it could be a fake out, right? So now look, people for the longs, right? It goes up, it's respecting this inverse fair value gap, right? Coupled with this bullish order block here, right? Some people are thinking, okay, we don't want to go lower, so we're going to go higher. So we hold it, we go up, and then we just dump. So it stops out the people who were thinking longs also. And then the move goes down. Look how it closed, goes up, and then it goes down and takes out that same low that I was targeting. And then midnight open, which was here. So let's chart what's going on and do all these things. Because we did have one little retracement, but I did not catch it. It pulled back up to a fair value. Okay. So let's look at the price action. So it closed below the same inverse, right? Yeah, so we're using the same inverse here. It used it here, used this here, colored outside the lines a little bit, used it, and then disrespected it. So right here is where we're looking at. So that bullish candle with that move down right here is a bearish order block. We expand lower. Look at the fair value gap right there that it used. This fair value gap right here. So look at the fair value gap, closed, retest. Just look how it stays in the lower half, showing signs that I don't want to disrespect it, showing signs that it don't want to come up here, do not want to come and retest this zone. It's extremely bearish, right? It's showing signs that it don't want to go higher. It wants to go lower. And we're below this bullish candle here. See how we're below the opening price? So I want to see this last bearish candle, because this is an order block. I want to see this last bearish candle here hold as resistance. Because remember, I'm sorry, the bullish candle. Sorry, not bearish. The bullish candle. Because now that I'm bearish, I want to see the bullish candles hold as resistance to push me lower. Because in the order block, the bullish, so right here, this is the order block right here. So when you're bearish, the bullish candles is what you want price to push lower, to hold as resistance. So this bullish candle here, look how we go down here, we generate this low right here. It always generates, pulls back before it actually go to the target. Look how we drop, we come right back. We got internal highs here. We come right back and respect this bullish opening price. The most sensitive part is from the opening price to the low wick. Look how we come respect it. Do not have the willingness to come back up here to this green, to this last bullish candle, which is a bearish. Look at the closed right here, which is a bearish order block. So you want to see bullish candle support price lower as holding as resistance. How it come up and then displaces lower. Now look how it touched the midnight open, drops, fair value gap, dumps some more. And this was a play that I was looking at. Dump some more, fair value gap, order block, this bullish candle. Remember, now I want to see, look at the example of the bullish candles supporting price lower. The bullish candles holding as resistance, right? I'm going to draw all of them. Hold on, look. You got this bullish candle here. Right at midnight open. That bullish order block. You have this bullish order block. All of the bullish candles, look how all the bullish candles are holding as resistance. And I hope y'all understand what I mean when I say it's holding as resistance. Okay, so every red line I drew, it's a bearish order block, and it's anchored to a bullish candle. Look at this bullish candle here. Look how we close below. Boom, order block. Look how it comes up, touch the opening price, displace lower. Boom, fair value gap. Look how it comes up. It do not have the willingness kind of to touch it, but it gets close enough. The bodies are holding in the inefficiency. Displace lower. This bullish candle right here, another order block. Look how it gets below here. Look how oh my gosh. Look how all of the opening prices do not close above. Look at this. Look at the bodies of the candle. Close below the line. Close below, close below, close below, close below. They're all respecting the most sensitive part of the order block, which is the opening price here to the low wick. The bodies are telling the story, but the wicks is doing the damage. Right here. Look how I go. Order block, fair value gap. Look how we go here. Respect the fair value gap. Respect the bullish candle. Support price lower. Holding as resistance. Dump some more. Now we got this green candle, bullish order block. No fair value gap, but it's one here. Drops lower. Look at the bodies. Look at the whole candles. They're all closing below the opening price. The wicks are up here, but the bodies are telling the story. Then that bitch just dumped. Shit crazy. All the way down. And also, if I go to a 4 hour, this is another reason why I was expecting it to go lower. So like, I'm gonna delete everything, right? Look at this. So remember, the market was where it was up here. We're in the 4 hour. Look at this. This is a 4 hour fair value gap, which was here. So that's another reason why I wanted the market to go lower also, because we had these lows. We had equal lows. Go to high time frame chart. We have right here, perfect. You have these equal lows right by inefficiency. So this is what I mean when I say you want to see a sweep for longs. The best plays for longs, you want to see a sweep into a key zone, right? So this is a zone that we were targeting. So it was way up here. We're way up here. So now we're targeting this zone, which is these lows. So best short plays happening in premium. We have equal lows, relative lows, 4 hour fair value gap. We're using it as a draw on liquidity. Look at the sweep of the buy side here. Lack of displacement higher. Immediate disrespect of the opposing PDRAs. Dump. So that was Friday's.
Friday's P8.
And that's all for today, man. I'll catch you on the next one.